Hey, did you know you can lose money by saving money? In this video, I'll uncover a secret that stock market investors have known for years that might help you with your savings goals. Before we do that, I've been covering the stock market for more than 25 years. I've interviewed hundreds of investors on this topic. Many of them go through this exercise I'm going to tell you about that explains how you can lose money by saving money. But to really walk you through this, I'm going to do my first acting role. I'll play person A, a saver, and person B, an investor. And I'll show you how one of these people could end up with more than double the money the other has over 20 years. Now, I have no acting experience, so be nice in the comments. Let's start with person A. He's a diligent saver, and he saves $10 a day. Person B is a great saver too, but he takes the $10 a day he saves and invests that in the stock market. So, which one of these people has more money after 2 decades? Well, person A, the saver, would have roughly $73,000. But remember, inflation can reduce the value of your money over time. So $73,000 in 20 years could be less valuable than $73,000 today. As an example, if you wanted to have the equivalent today of what $73,000 was worth 20 years ago, you'd need more than $120,000. So that's what the pros mean when they talk about losing money by saving money. Now remember, person B, the investor, invested $10 a day instead of saving $10 a day. Now it's at this point we have to be very clear, and experts will tell you this, there's always a risk when you invest that you won't get your money back. But for the purpose of explaining the power of investing, let's take a look at the long-term performance of the most talked about stock market index in the world, the S&P 500, which tracks the 500 largest publicly traded companies in the US. Its average annual return has been about 10% over nearly 100 years. But if person B can expect those kinds of returns, he'd have more than $200,000 after 20 years. So to recap, the investor would have more than twice as much as the saver. Thanks for watching. Make sure to subscribe.